Hello, I'm Janet Ridgway with Keller Williams Realty. I'm here with Jordan Rose and Mimi Clark, also with Keller Williams, and we are here visiting today with our great friends Spencer Murphy and Wes Masters with First Financial Bank. They are just going to kind of give us some of their opinions about what's going on right now with interest rates and mortgages. And we know that there's a lot of uncertainty right now in the market, and we know that a lot of you have questions about mortgages right now and if it's a good time to buy a home. So we just thought we would come to the folks that really knew their business. And so Mimi, I think you had some questions that you'd like to ask for your viewers out there.
Yes, well, thank you guys for taking the time to do this. We really appreciate it. I think with all the news and media, there's so much uncertainty everywhere. And so we kind of wanted to talk about, when you hear on the news, the banks are there's 0%. What does that mean?
The Fed is
lowered it to
the Fed's
0%.
lowered the rate to
Yes.
0%. What does that mean if I want to buy a home right now? How does that translate?
You mean the news that came out Sunday with the Fed funds had lowered the rates down
Yeah.
to 0%, and
Yes,
our funds
exactly
started
that.
blowing up, and people wanting that 0% mortgage
So
for
you're going
30
to give me a
years.
house now, right?
Yeah, absolutely. We're going to pay you to buy a home,
Yeah, I'm
Janet.
afraid that will
We're gonna
never
make some money off of this
Yeah,
mortgage.
that's never going to happen, folks.
Well, it's really interesting because we've had this question a lot over the last 5 days. We've had numerous phone calls and text messages, people wanting to know, what does this mean for the mortgage business? Well, let me tell you, the Fed funds rate is not the mortgage rate. Mortgage rates are determined by the mortgage-backed securities. The mortgage-backed securities is not the Fed funds rate. Even though they might run a little bit parallel to each other, they're not the same thing. Fed funds rate, that's the funds that banks borrow money from. We can borrow the money from the Federal Reserve. It's a very short-term borrowing. And mortgages are based on the mortgage-backed security market. A mortgage-backed security is a bond that is supported by mortgages that have closed. And they're not the same thing.
Right.
Even though they will run
Right.
parallel somewhat to each other, they certainly, when you see 0% Fed funds rate, that does not equate to 0% mortgage.
Exactly. So you might give us some idea. I'm a first-time home buyer, and I'm coming to you, and I have good credit. What would be a range that I might expect right now to qualify? Give me a broad range, because I realize every mortgage is different, every lender is different, every loan is different. So there is not a cookie cutter answer for this, but ballpark range, where do you see people qualifying right now?
Less than 10%.
I like that.
How about that? Yeah, that's a great question, Janet.
There are 0% loans. It's called cash.
Okay, one of the questions that we do get a lot is, what is the rate right now? Can you tell me a number? People want a number. And I think a lot of it is, like our environment's changing, like our social circumstances are changing, like we thought we could be in a room together. Next minute, they could say, get half of these people out of this room right now. So things are changing every minute, every hour, daily. So if you want to really know a rate, how would you explain that to people when they come to you and say, what's my rate going to be today?
And that's an excellent question. We get that a lot on telephone and by text message. What is your rate? There's so many variables with an interest rate. The type of loan, the down payment, credit scores, the term, whether it's a 10-year, 15-year, 30-year term. There's so many different variables. What we recommend to our customers is go ahead and get us a loan application right now. Let us see the information. Give us the income documents that we've required, all the documents that we've required, so that we know when we're talking to you on the telephone and we quote an interest rate, we're able to lock that rate in for you as soon as you say go. Right now, in this current rate environment, rates are changing rapidly. And they, like I said, they go up quite a bit faster than they come down. So the best thing to do is work with your lender, get the information in, and when you have a question on a rate, we'll be able to quote a rate that's not a parameter rate, but a real rate for where you're at today.
And so when your realtor tells you that they don't know what interest rates are, it's not that they're not knowledgeable, and it's not that they're not trying to help. It's just the fact that interest rates change so fast that we aren't able to keep up with them. Your lender does. And of course we don't know your financial information to quote a rate to you. So be patient with your realtor. They'll get you the information, they'll try to help you, but if your realtor is telling you what your interest rate will be, they're doing somebody else's job. So.
And you brought up a good point there, Janet. You know, the realtor, the lender, this is a relationship.
It's a team.
It's not a transaction. We're looking for relationships. We want a relationship with our realtor partners. We want a relationship with our borrowers. We look at this as very long term. We're going to collaborate. We're going to work together. We have some limitations of what we can share because of the confidentiality, but we're going to work together to get us,
That's right.
get y'all the information you're looking for, but also to get the buyers the information they're looking for, and to make sure they have a great comfort level in the transaction that they're proceeding with.
We have a team mentality.
It is a team mentality for sure.
It takes a village, but
Yeah.
it takes a village to buy you a house. But we'll get it. Short story: when my husband and I first bought a home, I was a stockbroker selling tax-exempt bonds for 13%, and we had 14.5% mortgage, and we thought we'd hit a home run.
You did hit a home run.
So everything is relative, and so that was at that time people said that was a terrible time to buy a house, so we bought a house, and it was one of the best things we did. It started us on the path to home ownership, and so I just want to say to those of you out there that are frightened, there is always uncertainty. We are never guaranteed another moment of the day or another day of our lives, and so you have to make a decision based on what's right for you right now. And right now, interest rates are very favorable. People are still buying. People are still selling. Your phone is still ringing. Our phone's still ringing. Yeah.
And as was discussed earlier, they said that if it made sense to make the purchase last week, it probably still makes sense to make it this week too. So.
Yeah. Now I have one more question. Let's say I wanted to buy today and I locked in a rate for a 30-year mortgage, but all of a sudden some plans change in the next 6 months. How long does that rate stay there if I needed to purchase 60, 90 days
How long
out?
can
Or
you lock a
like
rate
if I had a letter today saying I qualified for this rate for this 30-year mortgage, how long does that letter last typically here?
Okay, then that's a great question. Interest rates change at least daily.
Okay.
They typically go up faster than they come down, which we fully understand. And so an interest rate quote today may or may not be valid this afternoon or tomorrow. And so you certainly want to be talking to your lender to get the current mortgage rates. Typically, we're going to be locking in loans over a 30-day period of time. So we anticipate you having a contract on the home. We anticipate you providing all the information that we need where we can close that loan within a reasonable period of time. We can do 60 and 90 days locks. When we get beyond 90 days, there are some locks available out there, but that's not the norm. Normally 30, 60 days is what we're looking at on that.
Okay.
If you don't mind, what people ask me all the time is how much are closing costs. And so
Okay.
I try to explain to people that there are 3 numbers that are your cash to close number. There's your down payment amount, which will actually decrease the amount of money you're borrowing. There's your closing costs, which are typically fees associated with getting the loan. And then there's this third number that doesn't get talked about very much, which would be prepaids.
Right.
So I thought y'all might want to kind of address that and give people some idea of what they want to think that they have available to make a purchase.
Well, you summed it up really well there, Janet, with those 3 different components. The closing costs and down payment and prepaid items are certainly they're certainly real, and that's where we really want you to talk to those of you that are out there looking to buy a home. We want you to talk to your real estate agent, your realtor. They've got a lot of different avenues there to help with that. But as a general term, your closing costs are going to be things your bank fees, your appraisal, your title fees, your the flood certificate, appraisal, credit report,
Right.
the one-time fees of the loan.
Survey,
Yeah, and so your
There's all-
prepays, there's not really an exact science out there, Janet. We see closing costs and prepays coming in somewhere in that $5,500 to $7,000 range
Right.
on a lot of mortgages, and so you would add that to your down payment, depending upon the type of loan that you have chosen, and that would give you your estimated cash to close. The best thing to do, work with your realtor, get with the lender, meet with that lender, go over the different options that you have available for you, and work with them to help structure the mortgage that works best for you.
Right. Just talk to your lender. They're great to help. They know what those fees are. They know how to help you figure that out and work through it. It's not a huge mystery. You just want to make sure you understand it and that you get the answers. When you're looking at a home and when you're looking at a mortgage, you want to know pretty much how much you need to have in that 30 days or 45 days whenever you're closing. You want to know what cash you need to have on hand, and that's just prudent to plan ahead and know how much money you need.
Oh,
So-
absolutely, and we want to work very closely with you.
Yeah.
Because you're out there talking to these borrowers too, you're meeting with these clients, and we want to be working with you to help us figure these things out too.
Yeah, there's lots of help. That's the thing. If you're wanting to buy a home, everybody is in the business of trying to help you. So call your realtor, call your lender.
Mhm.
We're all on the same team. We work together as a team. Our goal at the end of the day is to do what's best to let that home buyer and that borrower be able to feel like they've had all their questions answered and that they have confidence in purchasing the home. So we're all professionals here to help you, and we look forward to hearing from you. Call us with any questions.
Do you have anything else that you want to?
No, I
Add
just
or
really
ask?
appreciate y'all taking the time to answer all these questions for us, and we really appreciate it.
Thank y'all.
Thank
And
you.
everybody stay safe out there. We really, we're further apart than we look here.
Yeah.
We are actually virtually 3 feet. I think.
Yeah.